What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And go Bucks! I have my Ohio State shirt on as they play Missouri, and I'm very excited for that game. And I have a Belgian ale on me, Golden Drac, very good. But I really wanted to show you this video before I watch the Ohio State game. And I'm going to have a video for you tomorrow revealing my total dividend income for December, which is a really good month as well. But I want to show you a few things that are going on with my dividend portfolio, my dividend investing strategy that are working with my dividend snowball effect, and some ideas I have for making my fractional share dividend portfolio a little bit more powerful and to distribute a little bit more dividend firepower. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this out right now. So here's my dividend portfolio right now. The market went a little bit down. So I'm at $90,113.81 with my M1 Finance dividend portfolio. At my peak, I was at $91,017.07. So things have really improved with my dividend portfolio, and you can just see a huge turbocharge with this dividend portfolio once I started throwing a lot more in. So look at May 2022, I was at 30,000, and I said, you know what? I'm going to throw a lot of money in. So December 2022, 44,000, and now I'm at let's see, 90,000 right now. What am I at? $90,113.81. My dividends received are a total of $11,113.84. So you're seeing the turbocharge go in from TSLY and NVDY, and I'm excited for CONY to really turbocharge my dividend portfolio. Now, again, reliability with these yield max ETFs is not very reliable. It can go up, it can go down. So I would not retire on that for passive income. I'm using that income to buy my dividend growth stocks in the long run. So that's my strategy with these monthly dividend these options income ETFs is to really turbocharge it. So this is kind of my last video for you before I reveal to you my passive income and then start going over my thought process with my strategies and dividend stocks I need to add, re-add, and how I'm going to allocate my resources to buying a I was going to tell you, I mean, I have Prologis. I'm going to make a pie, and my passive income I earn, I'm going to start revealing to you, and it's going to go straight into an individual pie with Prologis and a few REITs, and I'm very excited for that. So I'm going to start in 2024 revealing to you my YouTube income. It's a little bit down. I haven't been as active, but I'm going to be very active because literally I'm going to be hiding in a bunker and studying for boards and doing YouTube videos and studying. So, and I'm still going to travel nurse a little bit, but it's going to get to the point where the transition from floor nursing to nurse practitioner is going to happen. And I'm very excited for that. Now, I mean, my body, I mean, I'm telling you, I worked 5 out of 6 shifts. I worked Christmas, and the nice thing about Christmas was it was time and a half. But I'm telling you, I mean, floor nursing, I see a lot of nurses that need knee surgeries or hip surgeries over time, wear and tear, all that shock that you absorb. It's not to from my honest opinion, it's not worth it. So I can transition, earn that passive income, have my side hustles, fund the dividend portfolio, and then when I become an NP, I'll hopefully start making that amount of money that I made as a travel nurse and go from there. But anyways, I'm going to jump to some of my most recent trends with my passive income. And I am like so stuffy. These weather changes are like killing me. Went from like 50 degrees to like 32. So my sinuses are like going crazy right now. My most recent trends for my dividend portfolio, I want to really go over FDUS and Saratoga Investment Corp. Everybody knows about ARC, but I really want to go over these two real quick. And these are business development companies. Again, my goal is to get about 400 to 500 shares and then really start doing some damage with my dividend portfolio. That way I don't have to reinvest any more dividends and I'll let their passive income do the work for me because I want them to buy stocks like Coca-Cola and other ones, Tyson Foods, Prologis. I want them to buy, those type of dividend stocks. I mean, the thing with high yield dividend stocks, they're good. Don't get me wrong. They're good if you know what you're doing. But the dividend growth over time is not the best. So the slow dividend growth is an issue sometimes. So you have to be aware of that. Now, again, it's going to take a while for a lot of dividend stocks to catch up to the distribution of Fidus and Saratoga. So I'm going to go over that real quick. Again, looking at Saratoga Investment Corporation, they're sitting at 25.86, a dividend yield of 11.14%, the PE ratio of 9.39, the average volume 145.54K, the market cap is 339.15 million US dollars. The year range is 2263 to 2887. Its day range is 2583 to 2614. Previous close is 2590. So the revenue has been pretty consistent. I've gone over those before, but I want to show you its dividend trends and dividend history. I'm going to start in 2015. This is a quarterly dividend business development company. It started off at 33 cents, then it jumped to 36 cents, and then 2016, 40 cents to 41 cents, and then to 43 cents. And then you see in 2016, little special dividend of 20 cents, it appears. Then 2016, 44 cents, 45 cents, 46 cents, 47 cents. And then I'm going to jump up a little bit to 2019, it was at 56 cents. Then in 2020, in February, it was 56 cents. Then you can see the pandemic hit. So that's the one problem. If there's a pandemic or recession, a lot of these business development companies will cut their dividend. So you have to be aware of that. So it's always good to not have all your eggs in one basket. I have kind of like a hybrid, high yield dividend stocks, low yield, high dividend growth stocks like, for example, Tyson Foods, for example, Kroger. Those are the big daddies that are and the big dogs that are going to be the winners in the long run. Starbucks, that's another one I own. I mean, those guys have consistently hiked their dividends. Their revenue trends are very good. And it doesn't matter what is going on with the market. They have been very consistent and hiked their dividends. So 2021, again, they started hiking their dividends 42 cents, 43 cents, 44 cents, and then they jumped to 72 cents. So that was a nice distribution right here. Now, again, you're going to see a high payout ratio with a business development company. Remember, 90% of what they make go back to investors, and they're usually high yielders. ARC is another example. Dividend yield, according to Zacks, is 11.12%. So if you bought one share, you made $2.88 with the 4.73% 5-year dividend growth. And their dividend growth in the past 5 years, the number of dividend increases is 15. So a high yield, okay, 11.12%. I'll repeat that again. Dividend growth is a little slow. You'll see that with the high yielders, the dividend growth is a little bit slower. So you have to be aware of that, and there's always a risk of a dividend cut. So here's the thing. If I get to 400 shares of them, imagine that distribution quarterly at 72 cents. And that's not a guarantee, but imagine what it can do buying a lot of my dividend growth stocks when I want to focus on them, because I focused on, again, the financial sector and real estate sector. And then these guys start gaining some ground for me, and I don't have to put anything in my dividend portfolio because these guys are doing the work. Now, again, I should probably get to about 150 to 200,000 and then stop, and then let the dividends do the work for me. But you're seeing what the dividend snowball effect is doing. and I'm going to jump to FIDUS real quick. They're sitting at 1969. Their dividend yield is 12.60%, a low PE ratio of 9.09. Average volume 324.89K. Market cap is 560.25 million US dollars. Year range is 1763 to 2126. Day range was 1955 to 1980. Previous close is 1979. I am so stuffy. This is ridiculous. I don't think it's a cold, but I'm just telling you, these weather changes drive me nuts. So I'm going to jump to their dividend history. So again, there's always a risk with business development companies, and I'm going to go over their dividend trends. I'm going to start in 2020. They were 30 cents to 34 cents, 38 cents, 39 cents, to 42 cents. Then it went to 41 cents in 2021, to 53 cents to 43 cents, and then to 43 cents to 61 cents to 66 cents to 70 cents to 72 cents to 80 cents in 2023. So you have to be aware of that. And if you are new to this YouTube channel, I'm going to do more reviews on a lot of my business development companies in 2024 that I'm going to focus on and really target. So I'm going to be very in-depth with those. A lot of you guys that are very loyal subscribers, I'm going to go more in depth with my dividend investing strategy, as well as why I'm investing in them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to jump to my disclaimer and take care and go Bucks. So as a reminder, this YouTube channel is strictly for entertainment purposes only. Do not use this YouTube channel for any form of financial advice. I am not a financial advisor, and it is best to seek financial advice from a financial advisor or somebody to give financial advice that is certified. Investing is a huge risk, and you can gain money, you can lose money in the stock market. So just be aware of that. Make sure you do your due diligence. And again, any economic decision you make, whether it's ETF, crypto, gambling, there's always a risk. You can lose money, you can gain money. So just be aware of the risks that you take when you make investments. So take care and have a good one. And here's the other thing. I currently own these stocks. If something drastically happened, I will get rid of them. Take care.